Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Monday, the 8th of March, 2021, 5:20 p.m. Central Time. Well, it's gorgeous in Chicago, 65 degrees today. I was driving around for lunch in my car with the top down and watching the snow piles on either side of me. It's amazing. I still have snow here. And that's the kind of weather this is. We still have snow on the ground, not everywhere. It's in the shade areas, but it's there, and it's not, it's a little bit of it. There's still piles of it in the shaded areas. Anywhere the sun's able to get to, it's gone. And spring fever's breaking out. People in shorts. I mean, everybody's outside. All right. People are just so tired of being locked in. Well, we're going to see that on things. You're going to see that we're going to get a lot of demand this spring as it's opening up now for gasoline, for people to go to events, for restaurants, just to get out anywhere. That's going to happen. In the stock market, you know there's a rotation going on. You had a pre-COVID and a post-COVID trade. Pre-COVID was the high-tech stocks. Post is the industrial and the value stocks. I don't know how to make it any clearer to you. That's what's been going on. It's why the Nasdaq was down sharply today as the Dow was up. In fact, the Nasdaq's down about 11% now. Okay, from its peak. So what? We know what's going on. If you're watching the shares of Tesla, taking a tremendous beating. Apple taking a beating. But you look at Disney, taking off because they're opening the parks now. So when I look at the market, okay, the market's not doing much for the week, and we're open right now tonight. You're up 0.7%, not much going on, up 2 ticks from where you finished off on a closing basis on Friday. When you look at this chart, I told you on rallies, look for the resistance to still be here. Clear that, and it's a whole different ball game, but you got to clear that number. The pattern on the chart is still lower highs, lower lows. Now, if you get my newsletters, I hope you do. You know, I'm talking my full research. I wrote today that I think, and I said it in my morning video, that if the markets rally, which I thought they would, I think we'd get a rally back to the 18-day average of closes. And that's where I thought the pros might sell it short. I told my subscribers, I don't mind telling you what I told them, this kind of risk is too big. It's $2,000. It's a lot. But that's where I think the market can get to, and I think the pros that have the money will probably sell it there. And win, lose, or draw. If you went short today against that 18-day average and the market finished 50 points lower, 55 points lower, I'm a winner. It's worth the price of a subscription. Got it? That's my point. I want to stop here for a minute. If you're going to watch these videos, I have a favor. Subscribe to them on YouTube when you watch them. They're free anyways. You know that then when they're coming out. That's the first thing. I don't keep a schedule. I do these, but it's not a schedule. And every time I put them out, even on the weekend, the updates, you get it that way. And it helps me with the algorithm that YouTube uses. We advertise on it. We get to more sites. We get more subscribers. It keeps this freebie going for you. You know I don't cover everything here. I cover it in my paid subscriber, and it's super inexpensive. I mean, when you're down to $7.95 for 26 videos a month, okay. Lower highs, lower lows, resistance. You got to take out this number right back here to stop this downtrend. And that number's 39.12. So I think the pros were selling the market right here at 38. Let's call it 38.70 just for the sake of discussion to 39.12. So you've got 42 points at $50 a point. It's the reason I said it. It's high risk. It's $2,100 on a full contract. Now, the interesting thing is Chicago Mercantile just sent out a notice to everybody that they had a record volume day in these micro mini contracts last week. I think 1.5 million of them traded. So remember what I told you, there's a way to come in for these dollar a side contracts and commission. You can talk to my staff. They'll get you all set up on it. Okay, and I'm talking that's the commission rates on those. On the S&P 500 index, all right, where did you find support? The lower band a couple of days last week. You bounced to the 18-day average. Nothing has changed. Again, still a bearish pattern. So you have the bias down since you're under that, the trend is down, and momentum's trying to point up. You're starting to get some divergence. That momentum pointed up to get you back to the neutral number, the 18-day average. Now we have to see what it does. Who's in control going home? The bears. What number breaks their party? Getting over 39.12. In the Nasdaq, it's a rout to the downside. Now, these aren't lower lows. You were cheaper than this on Friday, but it just keeps driving. On Friday, I also said that, hey, now that you're down here, when you get past the 100-day average, and this was Thursday, when you get under both these numbers on the way up, often then the 100 days offers a little resistance. But this combination of numbers is often an area the traders look at to cover shorts. You're not embedded yet. That game changes if you embed. On Friday, you came up like this. Today, you came down like that. And tonight, you're bouncing. What if you embed? Let's not count Tuesday because we don't know where the numbers for the slow stochastic will end up. Both numbers on Monday were under 20, not the day before. So you're just oversold, nowhere near embedding yet, and drifting here. Resistance, support. Those are the two numbers that I look at. In the Dow, a new contract high. No, nothing wrong with the audio. I'm just amazed. A new contract high. Look at that out of nowhere. You were just down to 30,512 and you're back to 32,114. Wow. That is impressive any way you want to cut it. The Russell, what number do you think I was telling traders today to look at on the moving average? Same thing that I was telling you on the S&P. You'd have to take out that high to prove me wrong. Where did the market go to? It missed it. I'm wrong because it missed it by 1.5 ticks. Not very much, 150 points. All right. But you're in that ballpark, and that's my point. Take out this high here, and we'll come to that number for you, and that is 2281.50. You negate the downtrend. What else is happening? The market doesn't want to stay outside the Bollinger Bands. Momentum, like in the S&P, trying to turn up a little. Who's in control? The bears. Better so here than actually in the S&P. The resistance now 2242. Get over that number. I think you'll see the people bail out. So something to watch there. VIX. The VIX tried to get to that 18-day average. I was looking for that this morning, that it would come down there if you were up early in stocks. You were at 4 in the morning. You were not when this opened. So while you got a drop, then you had that big break in a bunch of the indices, and it kept it bid. So the support's the 100-day average to the 18, right in there. If you take out 2245, you get out of that period again where the market is no longer bullish and you go back into that just waving back and forth. Traders are asking, why isn't this market getting a big premium built into it when you see markets fade like in the Nasdaq and other places? And the reason is they think it's a temporary move. Otherwise, I think you'd be down hard if traders really believed what? Well, it would be first up and up hard if they believed a hard break, but the fact that the market can't get away and it wants to fall is still a bullish pattern. So underneath this all, there's still bullishness about this market. That's how I'm reading it. In the 30-year bond, what about this reading right here? You cannot count Tuesday because we don't know how it'll finish. Both numbers under 20 on the close of business Monday, Friday, not the day before. You need one more day. Do you typically embed? No. So I wouldn't be surprised if the market tries to rally right here. If it does embed, that's a good and a bad thing. Number one, it means interest rates are going even higher because the lower you go in futures, that's a higher rate. The second thing is if it embeds and loses it, then we're going to get another bout of short covering. The last one we saw didn't carry very far. So I think what you've got here is a locked-in idea that long-term rates, at some point they'll get ahead of themselves, but the idea they're going to revert back into a bull market, not there. Same in the 10-year note as I'm reading it. The market here trying to embed. You can't count Tuesday. So we go back to Monday, we go to Friday. You're just oversold. And again, you hit those Bollinger Bands. You know what? If you were sitting next to me, I'd be giving you the elbow. Get out of your shorts. Try to sell the rallies again. Make the market prove it can embed. If it can't, just walk away from it. I told traders that at a higher level, to be honest with you, when you lost the embedded reading. And I don't see a way to get short this market right here. In the dollar index, 3 days in a row over the upper Bollinger Band. First, it's a sign of strength. Second, it's excessive. I count each successive close over the upper Bollinger Band is taking away one of the 5 percentage points, that 5% of the time when a market trades over that band or under, stays outside of it. So I've got a 2% chance that it'll stay out of that band for tomorrow and then a 1% for Friday. In other words, a 98 and 99% chance. Is that a bear sign? No, but it is certainly a sign. Question being long over that band. That's how I interpret it. Eurocurrency is the flip-flop. 3 days in a row under it. Will you keep staying? You could, but again, 5 is really pushing it in the futures markets and the currencies. Don't believe me. I don't want you to. I want you to go to your charts. You'll see these patterns with your Bollinger Bands. Find out how many times in the currencies on a lead contract, the lead contract month. I don't want to hear about a continuation chart where it makes the adjustment. A lead contract that you get more than 5. And you tell me, if you go back 10 years, tell me how many you find. I think you're going to be shocked. In the British pound, higher high, lower low, oversold, a lot of noise. So it seems to me we want to be stuck between the upper and possibly the lower Bollinger Band in a noise environment right now, not trending. Bitcoin went bullish again. You've got higher lows, higher highs here. Don't know where the market's going to end up, but until you take out 46,295, I'm going to look for support in there at 50,447, the potential back to the 55,700 level. Crude oil, as you can see, the differential on the spread, well, you would expect that the Brent is going to get bids more than our oil. They cut back production. They're getting attacked in Saudi Arabia. Why not? So you look at that, you see where you're at, but even this market wants to stay within the Bollinger Band. That's my point. It's bullish, it's overbought, difficult to buy into a Bollinger Band. I don't think the pros are in it anymore. I think they walked away from it. I know you'll think I'm crazy saying that, but that's what I think. Same thing in the WTI. You get up to a point where you say, maybe for this leg, that's it. You're overbought, you refuse to embed. I need another event. Gasoline. I think that Friday was the day that the traders came out of this market. Now, I want you to look. You're trying to lose the embedded reading right now. You did not lose it on Monday. You're trying to lose it here. You don't want to get what I call stochasticitis, which means you're looking at every tick. Oh, should I be in or out? I think the right thing that the traders did is they took some money off the table here, but I don't think they're going to buy on this break. Why? You're already losing the embedded reading. So to buy deeper, it'll be worse off. Market either holds here or I think the pros come out. And I mean right here. And in that gas, would I ever tell you to sell a lower Bollinger Band? No. Where's the resistance on rallies? The 100-day average in green. What's the trend down? Is this an important top? I think I've been mentioning that to you here for a while now. So as you know, in the morning, and I did it this morning, 5:15 to 5:40, I start recording. I like to do it 5:30 to 5:40. And the reason I'm already up an hour and a half, an hour, and I've read everything, and I want to throw the ideas off of you. Now, it's easier for me on the futures than it is in my spider ETFs because I want them to open. I want the action of the day. Here, we've already had it. You're open. I'm 12 hours into the market. It opens most of them at 5 o'clock at night. So by 5:30 in the morning, you're over 12 hours, and people are waking up and the volume's coming back in. You can view them in any one of 3 ways. Each subscription gets free an app that works on your iOS, your Android system. I start you off with this. I review the markets in this exact sequence each and every day. So let's assume that you want to go just to metals. If you're on our website, you can pull the scroll bar. It's got big words come up, metal markets. If you're on your phone, you don't want that. It's going to take up all the action. So you just pull, you're in interest rates. Oh, he's going to be in his metal shortly, because I followed the sequence for years the same way each and every time, and I think that's important, so you get used to that. There's a cost to it. I'm not going to get up that early in the morning, do all these for you for free, but it's also not exorbitant. I want to be your broker at the end of the day. So to show you what we've got, to give you the services, $7.95. Each video is about 20 minutes long, Monday through Friday. On the weekend, the 6th video is just weekly charts, another 20-minute video. Sometimes I do more than one, but you get an average of 24 a month. Come on. Where are you getting that for about $7.95 for 30 days? And the idea there, gee, I like the metals. What does Ira think on it? I'm thinking these interest rates got a ways to go yet. What's he thinking on that? Why is he thinking it? Well, he's explaining it in the charts. You're not getting that from most people. So enjoy it. I hope you like it. I'm Ira Epstein. Remember to subscribe on the YouTube. I'll see you all tomorrow.